Move right on then and connect with the corporate voice. Happiest Minds is in the spotlight. We want to understand a little bit more about their overall business outlook, their capex plans, margin guidance, and view on acquisitions. Venkatraman Narayanan is the managing director and CFO of the company and now joins us on the show. Thanks much for taking time out. Let's get straight to it. Your 25% growth guidance has been factored into the acquisitions. Can you tell us a little bit more about your overall revenue guidance now? Are you looking to scale it back, given that we haven't heard anything major yet in terms of acquisitions?
Good morning. We had given a guidance of about 25% in dollar terms, and it was, like you rightly said, including acquisitions. In the first quarter, we did about 3.6% in dollar terms. So yes, if you take that kind of a growth, we wouldn't touch that 25 unless we close those acquisitions that we have in the pipeline in the second or the third or the fourth quarter. We have got a couple of good names in the pipeline right now, and hopefully keeping fingers crossed because these things, acquisitions tend to be binary. We hope to close at least one or two in the next quarter or 6 months.
Right. Sure. So what was the organic growth, Venkat, that you were factoring in? Or so say for how many months you were anticipating some acquisition to kick in?
That is, we had overall taken 25%, but if you ask me to do a back of the envelope calculation in the organic growth, that would be about, let's say, between 15 to 20% would be the organic growth number that we had factored in.
Are we likely to hear anything about an acquisition soon? And if so, what size, scale, geography?
Like I mentioned, early days, we've got a good pipeline. We are in active discussions and, engagement with respect to how to go about doing the acquisitions. But very mindful of the fact and the risk that these tend to be binary. If the valuations are unrealistic or if we don't see how we can draw synergies from an acquisition, we will have to step back. So it's a touch and go kind of a situation, but at the same time, a decent number of names which we are pursuing, and we are reasonably confident on that.
There is a very interesting data which I think is worth revisiting, and which is about the commentary from US Fed about US GDP going forward. They've almost doubled their GDP outlook, growth outlook. Now, there is a direct correlation between what US economy will do and what will happen to IT. In your assessment, do you think 2024, calendar year 2024, could be a turnaround year?
I think the industry is looking for a pickup starting Q3 of this year. Q3 typically tends to be a weak quarter for the IT industry given the holidays and the holiday season in the US, which happens to be our largest market. But despite that, we are looking to see an uptick in the spend, and which will continue into Q4. And then, like the press has been reporting, 25, 24, 20 seems to be a good year for the tech industry. The second point I would like to make is whenever there has been a correction and a revival, the tech industry has been the first to come out of that, whether it was in 2000, 2004, 7, 14, whichever year post-COVID, if you look at it, that has been the trend. So, the tech industry first gets the shorthand and then quickly picks up when things starts improving.
How much of your business you would say is coming from the pure AI generative space? Because that's what everybody needs to understand in terms of the migration.
There are two things. Like every other IT company, we are very focused on AI. We are, as we speak, creating a division unit to make sure that our focus is completely on that. You'll hear our point of view very quickly and the kind of organization that we are putting to address that. But while that's happening, we are seeing quite a bit of traction within our existing customers for integration of AI tools and AI capabilities into the existing platforms and solutions that we are giving to them as part of platform engineering or the digital transformation exercise that we have undertaken for them. We are yet to call out the number for AI, but we are seeing significant traction, and you will hear about it. Like when we started with IoT, we started reporting IoT numbers. Then we have been reporting IP-led services numbers. We've been doing the same for consulting in a manner of speaking, and automation for the last few quarters. Once we get a grip of how to carve out this number, because there are no pure AI projects. These are integrated into the existing customer deliverables, and we need to slowly carve these out and report them as a separate number. But there is quite a bit of demand coming in from existing customers and also new customers, so that it's almost like that foot in the door kind of a thing. You're able to give your AI solution. When you talk about transformation, you talk about it through AI-led transformation, and that's how you get into the customer. And then there are existing customers as well who want us to do AI-led projects.
So will AI be more like a Y2K kind of a hump where it will look very big in the short term as the migration happens, but eventually it would be forgotten? So let's say hypothetically, if you're talking to any large IT company, 3 years from now, AI would be part of their DNA rather than something which would have caused disruption?
I would go with that second line. It would be part of our DNA. It would become one of the key arrows that we will have in our quiver while we deliver capabilities. The jury is out on whether AI will have its independence day or it will become more like an IoT. I'm talking from a services standpoint. Internet of Things was one of the major change factors that happened a few years back, but now you see it's very well integrated into all the IT projects that we today deliver. Similarly, AI on the demand side will play a critical role, an important role, because it's going to help efficiency in coding and delivery. And there is the demand side, which is where the customers want us to integrate new solutions, new capabilities on the demand side. And there is an impact of AI both on the supply and the demand side, and we have to play that to make sure that we don't miss this uptrend that you have. But in 3-4 years, like you rightly mentioned, it will become a part of our normal delivery. It would cost huge amount of delivery efficiency to happen within the supply side, while at the same time the demand would be higher, and that would make up for any change on the supply side.
All right. Thank you so much then for taking time out and joining in, giving us an overall view on how the business is shaping up. As of now, no concrete acquisition plans, but things are in the works and perhaps may not achieve that guidance of 25% in dollar terms. Tell you what, with news that the index is lower by about 1/3%, 19,823, we'll take a very quick break, but be right back.